updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow now in the red, joining the S&P and NASDAQ. Stocks are dropping as investors sift through comments from San Francisco Fed President Mary Daly, who's warning that too much tightening could be unnecessarily painful for the U.S. economy. Also, mounting concerns that China may tighten COVID curbs after a string of reported deaths also continued to weigh on investors. The S&P is down 15, drop there of 0.4%. NASDAQ down 119, a decline of 1.1%. 10-year yield 3.81%. We've got the 2-year yielding 4.54%. Spot gold down $12 the ounce to $17.38, down 7 tenths. While West Texas Intermediate crude is down 0.4%, $79.73 a barrel. Disney shares are higher after the entertainment company brought back former leader Bob Iger to replace his successor Bob Chapek. Disney up now by 5.9%. Among the names scheduled to report after the close of trading today, we'll be hearing from Dell, Zoom Video Communications, and Agilent. All three are lower. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, we've talked in the past about what it means for people who've been laid off from some of the biggest tech firms. I mean, we're talking about companies like Meta Platforms, Uber, Lyft, Salesforce, Stripe, and more. And we talk about it oftentimes in the context of what it means in the bigger picture of what it says about the economy. But there's a different way of looking at it that's really important, and it has to do with people who hold H-1B visas and what they're doing if they've been laid off. We've got Sindhuja Ragnarajan on the phone with us. She's senior investigative data reporter. Actually, she joins us via Zoom from San Francisco for Bloomberg News. You can read her story right now on the Bloomberg terminal and at bloomberg.com/businessweek. Also with us is Joel Weber, the editor of Bloomberg Businessweek. He's with us right now in the Bloomberg Interactive Brokers studio. So, Joel, how should we be thinking about these layoffs?
Well, one thing that really struck me with Sindhuja's reporting and companies' reporting is about H-1B visas. And H-1B visas have been it's something that the magazine has written about before. Skilled workers that have largely been in the tech industry from abroad, and we're talking some pretty incredible stories about where a lot of these people come from. But the tech industry has really benefited from this workforce. But what's interesting is effectively it's a company sponsored. So the moment that any of these people get laid off or fired, it puts them in a really difficult place. A lot of these people end up with mortgages, childcare, all kinds of stuff because they're banking on a future here. Oftentimes putting permanent residency in motion at the same time. So Sindhuja, bring us inside this. Having seen this data, how significant of a hit to the tech industry are these firings having as it puts a lot of these people in jeopardy?
Joel, this is a very interesting question. So it's like hundreds of employees we know have been laid off just from Twitter and Meta, I think around 350. And I want to say it's an undercount because we're looking at people who have been posting on LinkedIn, putting their name out there in a crowdsourced spreadsheet or something, saying, "Hey, I'm in need of a visa sponsorship." Overall, like when we did our analysis, we realized just with like 6 companies, that have been recently doing the layoffs: Meta, Twitter, Amazon, Stripe, Salesforce, and Lyft, we found that the 6 of them employ 45,000 H-1B workers. That's an estimate we created based on our data analysis. And just between Twitter and Meta, we found hundreds of people who claim to be visa holders who have been laid off in the last few weeks. So it's a pretty significant number, and it's in the hundreds for sure.
As you and our colleagues Brody Ford and Katrina Manson write, people who do hold H-1B visas who then become unemployed, they can only remain in the U.S. legally for 60 days without finding new employers to sponsor them. Do we know anything about the terms that these employees are given when they are laid off from companies because they face this special circumstance? Like, are they given better terms because they're on this kind of timeline here?
Yeah, I mean, I think, that was the interesting thing we found while reporting the story. We started out thinking of the story as like a human story. What happens
Yeah.
when you just have this few weeks, few months of deadline and you're trying to scramble for another job and visa sponsorship. But what we realized is that some companies are doing better than their immigrant workforce and what policies they lay out. For example, we found that Twitter sort of didn't give a lot of assistance or support to these employees, and some other companies have like a little slightly better thought out policies. So, for example, your 60-day clock starts ticking after the last day that you've worked there. So if you could extend that last day, if there's like a notice period given that you're going to be laid off, but after 2 months, so that gives like people 4 months, 2 months when they're working at that company, and then an additional 60 days. So if that can be a form of relief, and as opposed to saying, you're laid off today, and then, we're going to give you severance for 3 weeks or whatever, or 8 weeks or something. And then, your clock starts right now. So that extension of time is really important. And, some companies, I think Meta has done that, particularly for immigrant visa holders. Lyft was another one. Stripe, when they wrote that email, I don't know if they offered a notice period, but they definitely acknowledged that this would be very difficult for immigrant visa holders. And Twitter, was sort of, they didn't think through as much based on our reporting.
I noticed.
And, yeah, and there was and when employees wrote to them, many of them were really confused about when does my clock start ticking? Does it start the day of January 4th when you've said that would be our last day, but we're not productive, we're not are we on payroll, are we not, and is it going to be November 4th? And so there was like a lot of confusion amongst employees, and they got very little guidance, very little like immigration one-on-one counseling, or even anything that says more definitively, yeah, this is the day this is your last day, or that is your last day. They just said, you should consult your own immigration attorney. So I think, employers, that's like the least you could do for this workforce. They've invested so much time in this country, like you mentioned, and, at least give them like the most they can get so they can like succeed in finding that job, especially now at the start of a place when a lot of tech companies are instituting hiring freezes and holiday season when things slow down. So, the more you can do for them, the better it is for them.
Okay, so I want to talk a little bit more about the Indians because there are a ton of H-1B visa holders from India. Many of them, as you write in the story, have been here for years, and it seems like it's really hitting that country hard, these numbers, right? So whom did you talk to, and what did you learn from on the India quotient?
I think, a lot of people who come on H-1B visas, like you mentioned, Joel, like the goal is to eventually, get permanent residency and citizenship. And for a lot of folks, like, you stay on H-1B for anywhere from 3 to 6 years. Your company starts working on your green card application, they file it, and then you get your green card in, I want to say anywhere between 1 year to 3 years or something of that sort. But with Indians and actually Chinese nationals, like you file that green card and there's like a huge backlog, because there's this rule that says that every country is allowed to get only 7% of the green cards, and Indians and Chinese being a huge part of the tech force have immigrated on this visa in larger numbers. So particularly for Indians, there are 7% of the green cards reserved for them every year, which amounts to around 10,000 green cards, and then there are 500,000, nearly 500,000 holders who've applied for their green card. So only 10,000 will keep getting every year, and that backlog is huge and it's growing. So if you apply for your green card today, or if you applied for it in 2020, then the chances are it could take as long as you may not get it in your lifetime.
We unfortunately have to leave it there. Sindhuja Ranurajan, Senior Investigative Data Reporter for Bloomberg News via Zoom from San Francisco.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes to go in the trading session. A holiday-shortened week on this Monday afternoon. Romaine Bostic alongside Scarlett Fu, joined right now by our colleagues Tim Stenovic, as well as Katie Greifeld, Carol Master, taking a well-deserved day off. We welcome our audiences across Bloomberg Television, Radio, as well as on YouTube and Quick Take. Tim, a weird day here in the markets. I don't know if you can make too much of this. I mean, basically stasis, something that we've seen now for the last 6 or 7 sessions.
Yeah, Fed, one Fed speaker today and people digesting comments still from last week and tech under pressure. But volumes are so low right now. It's kind of hard to, take too much away from what's going on. I'm not seeing a lot of conviction. One place I am seeing underperformance, though, and shout out to Carol because she's not here today. We got to look at Chinese stocks that are listed here in the United States, ADRs of those Chinese companies. Under pressure today, down 3.8%. This is the NASDAQ Golden Dragon China Index. It is all about concerns due to progress or lack thereof that we're seeing when it comes to China reopening. We could see more setbacks following reports of more COVID-related deaths in Beijing and tighter restrictions. And when I say COVID-related deaths, I mean, we're talking the number you can count on one hand. The entire country saw its first documented virus-related deaths since May 26th over the weekend, and we saw 2 more in Beijing on Sunday.
So less than 10.
Oh, I mean, we got 3 in the last,
Hold on.
few days.
That's what we know of. That's what's been disclosed.
That's a very good point, Scarlett.
It's a good point. Okay, so still interesting to see quite the movement in HXC. I want to talk about Bitcoin, though. I'm dying to talk about Bitcoin. It's down below $16,000 a coin. That is significant just because it seems like that $16,000 level was really holding amid all of the drama that we've seen over the past 2 weeks or so. But Bitcoin, it's only down 3%, but again, below that kind of key level.
All right, well, we go back to the broader markets here with all the major indices and averages lower here on the day. The Dow basically unchanged on the day, but the S&P down about 0.4%. And you're taking a look at the NASDAQ composite right now. That's your big laggard here on the day. Down about 1% here on the day as a lot of those big cap tech stocks like Apple, Tesla, Amazon lower here on the day, Scarlett.
Yeah, a lot of drama in the crypto world, but not so much in equities. If you break down the S&P 500 into 11 industry groups, even with the S&P down 0.4%, you have more gainers in terms of industry groups than decliners. Consumer staples leading the way, specifically food and beverage names and household products names. That really tells you people gravitating towards safe plays, basically safe haven type companies. And that's why you also see utilities up, not by very much, but up 0.3%. Energy continues to be a laggard here. That was the case at the end of last week.
Yeah.
Of course, we did have oil prices fall as much as 6% earlier today before clawing back some of those losses.
Yeah, that was a pretty dramatic move that we saw there. Another dramatic move that we're seeing, at least on a single stock basis, is Tesla. Tesla shares down about 6% right now. In fact, over the last 2 months, basically since mid-September, those shares are down more than 40% here. It's not quite clear if this has anything to do fundamentally with Tesla itself. There's a lot of concerns here, of course, about a potential slowdown in the EV market. A lot of concerns, though, more about Elon Musk and whether he's being stretched a little bit too thin with his acquisition of Twitter, as well as some of the other things.
Twitter CEOs, how they always have their eye on something else. They're always running another company.
You're talking like Jack Dorsey when he ran Square and Block.
Well, there you go.
There's
Well,
only
we're
been
going to
2,
find
though.
out. A lot of demand destruction there. If you're a Twitter shareholder, you have to be a little bit perturbed here, particularly for a stock that was trading above $400 just I don't know, a year or so ago. SoFi Technology is also moving lower, down about 6%. This on the back, we're learning that the Democrats on the Senate Banking Committee are looking to investigate the cryptocurrency trading activities over at SoFi. And 2 of the bright spots on the day, guys, Disney shares up 6%. And to keep an eye on Becton Dickinson, this is a sort of a niche play here, but up about 5% here on the day. This is on the back of a court ruling that appears to have absolved it and some of its peers on some a cancer lawsuit regarding its plants here. Meanwhile, I was taking a look at investor sentiment, guys, and I know that Scarlett and Katie, you guys are all over what's been going on in ETFs, and it looks like that the sentiment is still relatively bullish here, despite the fact that this market has been trading sideways. The inflows that we're seeing into some of the big ETFs, this chart that you're looking at right now combines the QQQs and the SPY and SPY, and you can see that inflows have been pretty significant, pretty substantial here, basically 5 of the last 6 weeks.
Hey, Romaine, I want to go back to one of the single stocks that you chose to pick out on your board of movers today, Disney. I mean, if we think about single stocks and stories today, that's certainly among the biggest. I certainly let out some sort of surprise last night at 10 when I heard that Bob Iger was coming back to replace Bob Chapek after being gone just for a few years.
You were just sitting on your Bloomberg terminal at 10 p.m.
I was checking. I saw that I had a message on my phone and checked it, and I was like, wow, this is huge. This is absolutely huge news. Jason Bazinet over at Citi was on Bloomberg Markets earlier today. He's got a $145 price target on the stock, and our colleague Alex Steele asked him about how much more he likes the stock now that Bob Iger is back. Check out what he had to say.
There's nothing about Disney's streaming business that won't be as valuable as Netflix. The problem is, for Disney and a lot of other companies, the street is just unwilling to accept losses in this current regime. That's fine, but I just think that the logical implication of that is to say Disney's streaming business, which does over $20 billion of revenue, is worth nothing is a bit extreme to me.
That's Jason Bazinet over at Citi. He's bullish on the stock again, $145 price target. It's trading just shy of $100. The streaming business, he says there's opportunity there, and he says the street is discounting businesses like this that are losing money right now.
Scarlett,
look what Netflix is doing.
But Scarlett, what's different now with Bob Iger at the helm than when Chapek was at the helm 24 hours ago? What is Iger going to do that Chapek couldn't?
He knows how to talk to directors. He knows how to talk to talent. I mean, when you guys were talking about Bob Iger, I was just thinking of the Bobs in Office Space. How the Bobs are. Yeah. Katie knows what I'm talking about.
I actually haven't seen Office Space. This is somehow the second time it's been brought up.
You've seen the meme. You know the meme.
Well, I have seen the meme. Yes, that's true.
Here's what I'll say, Romaine. We had Felix Gillette on earlier, who covers this for Bloomberg Business Week, and he said that we could see more consolidation in the space. I mean, look at the big acquisitions that Iger made over his tenure.
But he might sell things. He might sell things.
So
but
Pixar.
Exactly, and that's exactly what he
sell
said.
things
He
off.
might sell things as well.
So like what? Pixar?
No, I don't know.
Lucasfilms?
I mean, those are pretty powerful
Marvel?
brands that I don't see being.
I mean, Marvel is basically keeping this entire industry afloat right now. And I guess my question too, in all seriousness, is this was a guy, I'm talking about Bob Iger, and he did a lot of great things in terms of operationally, but a lot of his success really was through acquisitions. And I wonder, is there an appetite for that among investors to do those types of big acquisitions?
We don't see them like we used to. We certainly don't see them like we saw over the last couple of years, especially in a high-rate environment. We'll have to see. Investors certainly liking it, though, today, although shares down from being up more than 10, a little over, close to 10% a little earlier. That is going to do it for our cross-platform coverage right now. We'll be back again live on TV, radio, YouTube, and Quick Take at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio. Why does everyone think it's so kind of wild, Katie, that I was like looking at my phone at 10 o'clock last night?
I don't know. I think
Should I go to bed earlier?
Yeah, maybe.
Okay, I guess I
What
should.
time do you usually go to bed?
Oh, too late.
Yeah.
That's the truth.
I don't know. I like to be asleep by 10 p.m. So I can wake up at 6.
Goals. Hashtag goals.
Yeah, for sure.
I mean, what do you think based on what Felix told us earlier about what's going on with Disney? I mean, I think Romaine makes a good point pushing back at the idea that one executive coming in and being at the helm of this company can change the environment that we're in right now. And I think that's one thing that investors are struggling with, because if you look at peers to Disney, right? Paramount, for example, or Warner Brothers Discovery, Netflix, and I'm using the term peer very loosely here.
Yes.
They've been under pressure.
They have been under pressure. I think Felix made a great point. I mean, Iger, he's pulled back in. He's only supposed to be there for 2 years. He's charged again with finding another successor. Like Felix said, I don't know, he didn't go so great the first time around. So we'll see how this one plays out. Will he only truly be there for 2 years? He's 71 years old.
Right, and one of the guys he was supposedly set to choose to be successor before Chapek wasn't chosen, who then left to run TikTok for a very short period of time.
I mean, his name wasn't Bob, so that was probably
That's a good point.
Yeah.
And I think the other part of this, too, is I just think it's so fascinating to look at what Iger's comments have been over the last few months. He's on a podcast with Kara Swisher not too long ago.
Did you listen?
Yeah, I listened to clips of it, and he was basically like, there's no way I'm coming back. No.
You know, people say things.
Also, he's 71.
He's 71.
He wrote the book already.
I hope to be chilling when I'm 71, but God bless. We'll see what he does.
Yeah. All right. Well, check out more coverage of everything around Bob Iger's return to Disney after being away for a few years. Remember, he's at the company for more than 4 decades. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. Let's get to world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Thanks, Tim. Well, today is the first day on the job for the newly appointed special counsel who's taking over 2 investigations of former President Trump. Former FBI Director Andrew McCabe tells Bloomberg he doubts that Attorney General Merrick Garland would have appointed Jack Smith unless there were some legal concerns.
I'm sure they spent a lot of time thinking about this decision. They've looked at it from every possible angle. They wouldn't have taken a step like this if they thought that the case against Donald Trump was not proceeding. That's not to say that everything will end in indictments, because we're certainly not there quite yet.
Andrew McCabe tells Bloomberg the Mar-a-Lago case alleging that Trump took classified documents is likely the first case that will be addressed. Continuing a Thanksgiving tradition, President Biden today pardoned 2 turkeys from North Carolina named Chocolate and Chip. And later today, the President and First Lady are sharing a Thanksgiving meal with service members and their families at Marine Corps Air Station Cherry Point in North Carolina. The Friendsgiving dinner is part of the White House's Joining Forces initiative. Well, the world's biggest sporting event is underway in Qatar. Touch fan Andy Stoff says so far, the atmosphere at the World Cup is great.
From the minute we arrived in the airport, there's a relaxed atmosphere. We thought it would be a bit more like lots of security and issues, but I think they did a great job in making everybody feel really welcome.
Well, Team USA is playing its first match right now against Wales in Group B. The U.S. leads 1-0. Earlier today, England defeated Iran. The Netherlands beat Senegal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy Lyons, thank you so much for that update. Really do appreciate it. It's Tim Stanovic and Katie Greifeld in for Carol Master this afternoon. We're live in the Bloomberg Interactive Brokers studio. You can watch us on Bloomberg Quick Take, bloomberg.com/QT, and of course on YouTube as well. Just search Bloomberg Global News. Katie, we got a couple stories here about things that you've been following very closely. I want to start talking about Cathie Wood.
Yes.
She's going on a buying spree, or has been on a buying spree, when it comes to one stock in particular,
Coinbase.
That you followed closely, that
Yes.
has been getting hit pretty hard lately.
It has been getting hit pretty hard. Just absolutely caught up with this crypto drawdown that we're seeing. Even though Coinbase, it's not FTX.
I don't get this.
Yeah.
I guess I get it a little bit, but
Well,
I'm going to give you the devil's advocate.
Tell me what
here.
you're struggling with.
I'm struggling with the idea that if you remove one of the biggest exchanges on the
Yes.
planet, then ostensibly that would be good for an exchange that is regulated and audited, that is publicly traded, based in the U.S.
sure.
And I'm talking about Coinbase here.
But, it would be bad for Coinbase.
If nobody buys or sells Bitcoin?
Yeah,
Okay,
if
that's
this
true.
is truly an existential moment for the crypto industry, and you have retail completely soured on the idea of using a platform like Coinbase. So that's retail. That's just the normal people. And then you think about people who are true hardcore Bitcoin believers.
Okay.
They're not using Coinbase. They're buying and putting it into cold storage. They don't trust these hot wallets on exchanges. They want this offline.
Okay, let's speak about buying and selling Bitcoin. If you want to do it in an ETF, GBTC, it's Grayscale's trust.
It's actually not an ETF.
Oh gosh.
And that's so important.
Well,
it would love to be an ETF, but because it's
thank
not
you for that correction.
an ETF, it can't redeem shares. It's trading at an enormous discount as a result.
Why?
Because it
but it's-
can't redeem its
but-
shares. So you have a
But
supply.
when you've spoken about the discount in the past, it's been like what, 5-10%. Now it's more than
now
40%.
it's 45%.
Yeah.
Yeah, it's nuts. People are offloading shares of GBTC as fast as they can.
Okay. Check out this story. Katie Greifeld wrote it. You can read it on the Bloomberg terminal. Also, give her a follow on Twitter. You're listening to Bloomberg Business Week.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy day for the Dow, down day for the S&P and NASDAQ. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. The Dow is trading little change, and like you said, S&P and NASDAQ are in the red. Dow's currently up 3 points. S&Ps are down 12, and NASDAQ is lower by 106. The U.S. 10-year yield at 3.82%. Gold is down 14. Oil is trading lower. And Bitcoin is sinking by 3.6%. Among the main 11 S&P sectors, leaders were consumer staples and industrials. Energy and consumer discretionary led to the downside. And leaders to the upside in the Dow, Disney and Coca-Cola, while Intel and Salesforce were under pressure. In other news, DraftKings says they see no evidence its systems were breached, and Interactive Brokers launched overnight trading for 24 U.S. ETFs. Also, Pepsi hit a record high. Wrapping things up, Dell and Zoom Video report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, House and Senate panels are planning hearings in December about bankrupt crypto exchange FTX and its former CEO, Sam Bankman-Fried, amid renewed calls for Congress to strengthen regulation and oversight for the industry. Also, FTX and related companies now in bankruptcy collectively had a carryover federal net operating loss of at least $3.7 billion. That's as of December 31st last year, based on tax returns, according to court filings. All this to say, Katie, the news about FTX continues to come. We've got Stephen Church back with us, bankruptcy reporter for Bloomberg News. He joins us via Zoom from our Wilmington bureau. Stephen, before we get to what's happening tomorrow, what's happening later this week, because even though it's a holiday week, we expect to see quite a bit of activity when it comes to bankruptcy court. What is the latest that you're following? Bring us up to speed.
I'm just preparing for tomorrow's hearing, which will include some big questions that people are waiting to answer. People have been waiting for a while. Amidst all the fire hose of news that's been coming out, we still don't know where all the money is and what's going to happen, how they're going to track down that money. Hopefully tomorrow, the first thing lawyers will do will give an update to the judge about their efforts to get hold of assets. So that's what I'm looking for tomorrow.
Let's go back into the fire hose of news, because one of the things that caught my eye over the weekend, other than the Disney news, I know you're watching that, Tim, what I was paying attention to was this headline: FTX owes its 50 biggest unsecured creditors more than $3 billion.
Sounds like a lot of money, Katie.
Oh my gosh, doesn't it, for only 50 people? Yeah. I don't know, Stephen, help me out.
Well, it's a good question about who these people are.
Yeah.
The company won't tell us. They specifically say that they're customers, which means that they could be people who simply had money on the system. And because they're customers, FTX is arguing that it would be not in their interest. It would be bad for the company to publicly release those names. That's hopefully will be a fight tomorrow. Hopefully the U.S. trustee will argue in the public interest that those people should be named. But the top few, the top 10 each have more than $100 million in claims against FTX. Those are unsecured claims. And they're all named as customers without their names.
Well, that's what I've been wondering. The fact that this list was redacted, is that standard practice or is that unusual?
That is highly unusual. A list of unsecured creditors is normally a public thing. They may redact, say, personal information. Suppose you have an individual who's not really involved in the company, who's a big creditor. They may take out that person's social security number, their home address. But for a blanket 50-person list with no names and no identifying information whatsoever, I've never seen it before. The fig leaf that the company is trying to argue again is they're really customers and therefore they should be protected, because if they release the customers' names, rivals will poach those customers, and then that will be bad for FTX in the long run.
But if this, as you said, this argument really hasn't been made before, does it seem like it's going to hold up in court?
It might. The argument has been made in limited circumstances, but never in such a broad way.
Okay.
We'll see what the judge decides to do about that particular issue. Eventually, some names will probably come dripping out because as the court fight continues, creditors will organize themselves and then they'll put their own motions forward during the case. So we'll start to see some names at some point. But in the early days, it's right now it's an odd black box.
Stephen, you mentioned that you are. By the way, black boxes keep coming up over and over again.
Especially with FTX.
Right? Yeah, with regard to FTX. Hey, you said you're doing a lot of preparation for tomorrow when FTX is set to be in court. There is going to argue that all U.S. insolvency cases related to the downfall of the crypto empire should be handled at Wilmington, Delaware, not split between federal judges in Delaware and in New York. What's the significance of this? I mean, obviously it has personal significance for you because you're based in Delaware, but how should we be reading into this as people who are following it?
Well, actually, there was some interesting news on that today. The regulator for the Bahamas agreed that the case that they filed in New York should be moved and consolidated down here in Delaware. What that tells me is that the regulators in the Bahamas are not going to have a big logistical and procedural fight over who should control the case and the future of the case. It looks like the normal process where you have international regulators and U.S. regulators working together in some kind of cooperative fashion, even if they may not completely agree. It looks like that's beginning to take hold. So that's one problem perhaps that FTX creditors might be able to breathe a sigh of relief on. It looks like there won't be a turf war after all.
Well, I have the same question for you again, but related to this situation. You can probably tell I'm not too often covering bankruptcies. How unusual is it to see a turf war over which court should actually control the case here?
It's odd. It's not unheard of. Sometimes sometimes the big international companies have different interests in different places. There was a company called Nortel many years ago that filed for bankruptcy. They filed in the UK, they filed in France, they filed in Canada, and of course they filed in the US. And there were battles there over who could get paid first. Specifically, people worried that U.S. bondholders would jump to the front of the line. And so you had courts in other places begin to make claims on specific assets. That didn't go too far. There was some difficulty, but eventually, again, they worked it out because it's in no one's interest to let this hit an impasse, because then the money just stops and nobody gets anything.
Stephen Church, we love it when you join us. Thanks so much for taking the time. He's bankruptcy reporter for Bloomberg News. Stephen, this afternoon, joining us via Zoom from our Wilmington, Delaware bureau. You're listening to Bloomberg Business Week. Tim Stanovic and Katie Greifeld in for Carol Massar this afternoon, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's a Bloomberg Business Week. Tim Stanivek and Katie Greifeld were live in the Bloomberg Interactive Brokers studio. In just a couple of minutes, we're going to be joined by Shaheen Contractor. She covers ESG for Bloomberg Intelligence. She is just back from Egypt, where she was for COP27. We're going to catch up with her in just a few minutes. In the meantime, though, Charlie Pellet, we got less than a half hour to go.
Indeed, Tim, looking at a down day for the S&P, the Dow, and NASDAQ, all in the red right now. Been a choppy day for the Dow, but right now lower by 0.1%, down 30 points. The S&P is down 15, drop there of 0.4%. NASDAQ down now by 115 points, down by 1%. Stocks lower across the board as investors sift through comments from San Francisco Fed President Mary Daly, who's warning that too much tightening could be, quote, unnecessarily painful for the economy. Also mounting concerns that China may tighten COVID curbs after a string of reported deaths is weighing on investors as well. 10-year yield right now 3.83%, with the 2-year 4.55%. Spot gold down $12 the ounce to $17.37. That is a drop of 0.7%. West Texas Intermediate crude down 0.4%, $79.73 a barrel. As for the market backdrop, Katie Kaminsky is Chief Research Strategist at Alpha Simplex Group.
So you've seen more positive signals in equities, especially around the CPI print. You're also seeing a little bit more reversion out of the dollar trade, but that's still there. So that's why I kind of said it's a balance between what do we see shorter term and longer term. And the longer term signals are still definitely saying that there's some things to worry about ahead, especially the curve, the yield curve being inverted recently.
And right now we've got Carvana shares plunging 12.7%. The online car dealer is careening toward a record low as investors grow more concerned about the continuing decline in used vehicle prices. So it is a down day for the Dow, the S&P, and NASDAQ, weighing on the NASDAQ 100 index. Apple shares down 1.9%, Amazon down 1.8%, and Tesla right now slumping 6.7%. Recapping, S&P down 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. We want to welcome in once again Shaheen Contractor. People who listen to the program are familiar with her voice. She's ESG analyst for Bloomberg Intelligence. She's with us once again in the Bloomberg Interactive Brokers studio, fresh off of her recent trip to the Conference of Parties 27. That's COP27, as it's known. Shaheen, good to have you with us this afternoon. You just got back from Sharm el-Sheikh, Egypt.
Yep.
Resort town. I know you did a lot of working there and not resorting, okay? Maybe some resorting, maybe some vacation. I hope you had some fun. First of all, what was COP like? I know this was your first one.
So, Tim, COP was like nothing I've seen before. It was, this 2-week conference where 40,000 people just descend to talk about climate. I don't think I've ever been in that kind of environment. It's like very focused. And there were so many interesting discussions, so many different things, especially around 2 things in particular. The first was really carbon markets. There was, people who were great supporters. There were people who were great sort of disbelievers. And the second one was around companies' carbon reduction goals and the need to sort of just go beyond just paper decarbonization, I guess.
Mm-hmm. Tell us about that debate there on carbon. What is sort of the rallying cry for the advocates, and what are the non-believers saying?
So when it comes to carbon markets, the goal is for companies to basically offset their own emissions by purchasing these credits from projects that remove carbon from the atmosphere. And basically the goal there has to be that sort of the price of carbon, the cost of carbon has to pay for that additionality. Sort of without that, the project might not have been viable, which makes it sort of an additionality. The people who are against it believe that a lot of this money is going to go towards projects that are already financially viable. It's like a renewable project where it's cost competitive. It's going to be built anyway. There's no additionality, so the money is really going to nothing, I guess. So it's basically the point that you have to fund a project through offsets, which otherwise wouldn't have existed.
Okay, well, you cover ESG for Bloomberg Intelligence, and a big part of your trip, of course, had to do with the way that you're writing reports about what you learned there and what investors can learn from the way that ESG is being talked about at events like this. What's a big takeaway that you have for the Bloomberg Intelligence audience?
So the one thing is, and I've said this before, but before COP this year, before COP last year, companies are setting these carbon reduction goals at a pace we've never seen before. There were quite a few interesting talks that happened around actually sort of implementation. Like the UK, for example, had this new proposal during COP where, if a company has a goal, they have to have a plan on how to meet that goal. I think that's the biggest takeaway. Even in our research, we find that out of the companies we've looked at, about 85% have carbon goals. But what do these actually mean? It's a huge gap.
Yeah, I mean, this is something I always think about. Like, how do you factor in goals such as that one when you're, thinking about a company's ESG score?
Yeah, so that's really interesting because, when carbon is material, like for sectors like utilities, really sort of environmentally heavy sectors, that's when actually having a goal could have some kind of financial impact. So I think it comes down to materiality. What are the sectors where carbon matters and how does it actually factor into your financial performance?
I want to talk bigger picture COP because you were there and I haven't gotten to speak to many folks who were there. Do you leave with the impression that it's useful to the extent that all of these countries are going to leave and go back and work to reduce carbon emissions so we ultimately see a reduction in climate change?
So, Tim, I'll be honest, before I went to this, I was really skeptic. I was like, why? What is the point of gathering all these private jets and blah, blah? But then I spoke to a negotiator there, and he told me one thing. He said, Shaheen, think back to 2015, right? No country had a net zero goal or had anything really to do with sort of climate ambition. Yeah. But look at where we are today. About 130 plus companies have net zero goals. So year to year, it's kind of frustrating, but over the big picture, we have achieved something, I guess, compared to business as usual, if you think about it. So I feel better now.
We're talking about it.
Yeah,
okay.
Exactly, see?
Are you optimistic?
Are you going next year?
I hope so. I don't know.
Are you optimistic, though, just in the last 30 seconds that we have?
I am. I think, given what companies are doing, given what countries are saying, given some of the things we've seen, I think I definitely am.
Well, welcome back, and thanks for sharing some of your experience with us. That's Shaheen Contractor. She's environmental, social, and governance analyst at Bloomberg Intelligence. Fresh off her trip from Sharm el-Sheikh, where she was there for COP27, the Conference of Parties 27. She's with us right now in the Bloomberg Interactive Brokers studio. Well, we are just a little over 20 minutes away from the close of trading. We see the NASDAQ underperforming, down a little more than 1%. The S&P 500 down close to half a percentage point. And the Dow Jones Industrial Average down close to 0.2%. Let's get to world and national news. For that, we turn to Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Tim. Officials are gathering evidence at the scene of a crash at an Apple store in Hingham, Massachusetts, not far from Boston. Nearly 20 people were injured, one person killed. Tim Cruz is the Plymouth County District Attorney.
It appears at the outset preliminarily that a dark-colored SUV went through at a rate of speed undetermined through a plate glass window and struck multiple people.
Cruz says the SUV caused injury to victims both outside and inside the store. He declined to release the name of the driver, who is male, or the victims. He also did not say whether the driver would be charged with a crime, but added a criminal investigation is underway. Well, the man suspected of opening fire at a gay nightclub in Colorado Springs over the weekend is being held on murder and hate crimes charges. That information surfaced in online court records today, 2 days after the attack that killed 5 and wounded many others. Gas prices continue to go down, with prices falling to their lowest level since March. They're currently at a national average of $3.66 a gallon. That's less than a dime away from where they were when Russia invaded Ukraine last February. AAA says the decline follows soft demand and growing supply. Singer Mariah Carey says she'll be living her childhood dream this Thanksgiving when she performs that iconic Christmas song during Macy's Thanksgiving Day Parade. She broke the news today on her Instagram account. At the World Cup, Team USA is playing Wales and leads 1-0. England defeated Iran. The Netherlands beat Senegal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld in for Carol Massar this afternoon. We're live in the Bloomberg Interactive Brokers studio in New York. Katie, I don't know if you have noticed, but it seems like there are more people, at least on Tuesday, Wednesday, and Thursday, riding the subway into work than on Monday and Friday. But it does seem like the subway's getting more crowded. I don't know.
It does, maybe anecdotally. But
there's also data out there.
There is data out there. Wow, that transitions neatly into what we're going to be talking about. There's all of these different return to office trackers. Bloomberg News did a really helpful roundup. It's interesting to see the type of data that they analyze to come up with their numbers. Castle Systems, I don't know. I read about them a lot. We talk about it a lot. It's probably the best known return to office tracker. It provides building access swipe cards to employees at over 2,600 office buildings in 138 cities. It logs their movements in and out every day.
It knows where you are.
Yeah.
Well, in October of 2020, Castle started aggregating swipe card data and making it anonymous. What they did from buildings across 10 of their largest markets, they called it the Back to Work Barometer, and they began publishing it weekly. Castle says it is the largest continuous data set following return to office activity, and a big advantage is that it's based on what people actually do. Here to the data, though, Castle shows that New York occupancy surged nearly 10 percentage points after Labor Day, when many bosses set forth new RTO mandates, yet has stagnated since then. It stood at 47.2% for the week ending November 9th, just below the national average of 47.5%.
And Castle is dominant. It's not the only one, though. There's Placer.ai. It's relatively the new kid on the return to office block. It's an Israeli startup. This one is interesting. It's supplied valuable foot traffic information and analytics on retailers like Walmart and Target. Now it is also trying to track, again, these employees. What are they doing? Are they in the office?
Well, are they working when they're in the office? Are they working when they're at home?
Question.
Check out this story. It's by Matthew Boyle. He does a lot of our return to office work here at Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all in the red right now. Stocks are declining with Fed hikes and China in focus. Mounting concerns that China may tighten COVID curbs after a string of reported deaths, continuing to weigh on investors. The S&P now down by 0.4%, down 15. The Dow is down 44, a decline there of 0.1%, while NASDAQ is lower by 113 points. For the NASDAQ, that is a drop right now of 1%. The NASDAQ 100 index also down by 1%. 10-year yield 3.82%, with a 2-year yielding 4.55%. Spot gold down $12 the ounce to $17.38. West Texas Intermediate crude below $80 a barrel right now, $79.73, down 0.4%. Down day on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. UK Chancellor Jeremy Hunt's first budget had to pass one test above all. It had to convince investors that the Tories' new leaders know what they're doing. Hunt took no chances. He announced significant tax increases and spending cuts that, in due course, should be enough to get public borrowing back under control. The bad news is that the forecast attached to the new measures is dire. Britain's independent fiscal watchdog predicts a recession lasting more than a year. Household disposable income, adjusted for inflation, will stay below pre-pandemic levels through 2027. Give Hunt credit for facing reality, but there's no disguising the gravity of this setback. To salvage its economy, the UK must do more to promote skills, investment, and trade. Avoiding another fiscal meltdown is only a start. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It's that time already. Less than 10 minutes to go to the end of trading here on this Monday, November 21st, 2022. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio. Let's get to our Drive to the Close guest. Eric Clark is portfolio manager at Rational Dynamic Brands Fund. He joins us via Zoom from San Diego. Eric, good to have you with us. How are you?
Hey, Tim, how are you?
We're doing well, thanks. It's good to have you back with us. So help us understand the way that you're viewing the markets right now. We're getting to the close of the year, sort of the final sprint to the end of the year. It's a holiday week. We're seeing volumes down, 23% right now versus the last 20 days on the S&P 500. How does the year end?
That one's a bit of a toss-up, to be quite honest with you, because we have tax loss selling at the end of the year, but we also have prices coming down to what I consider to be much more attractive than we've seen in a number of years. And so, it's anybody's guess on the timing and when people do their tax loss selling, but we've certainly already done all that stuff. And now we're trying to pick away at some of the opportunities that tax loss selling is giving us.
Can I write off the rest of the year then in trying to...
You don't even have to come in, Katie.
Okay, that's what I'm trying to get to.
Okay.
I have been hearing more about tax loss harvesting, and what a brutal year. But I want to bring you into a debate we were having at the start of the program about the consumer, because we're going to get a lot of Black Friday data on Friday after Thanksgiving. We know that the consumer is still strong here. When you see headlines and economic reports to that effect, what is your takeaway? Is that bullish or bearish for you when you think about what the Fed is trying to accomplish?
Well, I mean, listen, the Fed is a whole different story that we could probably spend a lot of time on. But from a consumer, when we are starting to feel squeezed, we start to make different decisions. We start to play the this versus that game. What do I need to buy? Even if I don't love the prices that are higher, what do I have to buy? I got to keep doing that. what can I defer maybe for now if I'm feeling the pinch a little bit, particularly towards holidays, and you want to have good holiday spending. So I think we're in that period of consumers just making a decision about what to spend on and where to go and which brands are the most relevant. I mean, that's where we spend all of our time on brand relevancy. So we feel like that we have a good expertise in that area, but clearly the consumers, feeling the pinch a little bit with prices being up literally across every category that we see.
Okay, so that's the perfect segue to talk about what you're concerned with, and that's an earnings recession. Given what we've heard about from companies that have reported already, and we still got Zoom after the bell, but we're pretty much done with earnings season. Q4 is not going to look great for a lot of companies. Amazon, for example, already gave us a heads up about that. Target as well. What did you see, and what does that portend for Q1 2023?
Well, I think the thesis is the next shoe to drop is earnings will start to reflect all the things that the Fed has done, and that slowdown will be here. My problem is, the valuations have been reset so much already. Who knows if it's a full reset or a 2/3 reset, whatever the number is. I suspect we have an earnings trough for the year, probably reported in the April quarter. And historically, markets bottom 3 to 6 months before earnings and GDP, et cetera. And so, if we're in late November now, the market probably has fully discounted, or at least, almost fully discounted the earnings recession that I think everybody expects.
So does that mean we've hit bottom?
Well, I don't know that we've hit bottom. That's above my pay grade. I'm trying to find the right price points for the brands that we love. It's really hard. I think, Michael Sempelis from JP Morgan put out a report. I think that 3,300, 3,400 on the S&P is a reasonable place to go. It doesn't mean we have to go there. It doesn't mean we stay there. But I think if we get to that level, you're going to see some, multi-year wonderful buying opportunities. And sentiment is probably going to be dreadful if we get down there. But that's usually when the best buying opportunities happen, when it feels bad.
All right, Eric, I want to get specific here. I want to talk about the brands, the names that you're excited about. What are you looking at?
Well, we focus on a lot of trends. And so some of them are consumer trends, and that's not just buying and selling of goods and services. We love this mega trend in alternative assets, people migrating a little bit of money from stocks and bonds into alternatives, real assets, infrastructure, private equity, all those things. Blackstone and KKR are the two biggest. They are fairly cheap now. The stocks have come off pretty meaningfully this year. I'm looking for really good snapbacks in 2023. Within regular consumer spending, I still like the athleisure, the Lululemons and the Nikes. They've come down pretty meaningfully. We still like the home. I know there's, home sales have cooled off pretty dramatically with the Fed actions and mortgage rates rising. That just means that people are going to stay in their homes rather than move. And so I'm not surprised to see Home Depot and Lowe's still do pretty well. Inventories are up a little bit, but pricing power is really strong.
Eric, Tesla is on your list as well, thanks to the notes that you sent our producer Paul a little earlier today. I've got Tesla as one of my decliners today. It's down, another close to 6%, 6.5% right now. Yeah. Down more than 26% from when Elon's deal for Twitter closed. Why are you bullish on Tesla?
Well, we sold it much higher ago, and we just started nibbling, literally put a pinky toe in the water a little bit higher than where we are, and we'll start to, it's the smallest position in the fund. I just, right now, the distractions that Elon has had with this Twitter, I think, are providing long-term opportunities. And so I'm going to be very slow and methodical to put money into Tesla as it declines, but anything under, I think, 150, between that 125, 150 level, I think are pretty good places to add to that name for the long term. But it's a teeny tiny portfolio position right this minute.
This is really interesting. The Tesla discussion, the Elon Musk discussion. We hear all the time as a bear case for Tesla that, this is Elon Musk is a distracted CEO. Obviously, he's spread very thin with the most recent Twitter fiasco. How much of a concern is that for you? You say this is a long-term sort of nibbling that you're doing, but how do you factor that concern in?
Well, I think that he is getting the message. Let's use Disney as a good example. You know, Bob Chapek probably wasn't the right guy. Bob Iger's coming back. Elon said he hates managing day-to-day business. That's not core strength. He needs a Tim Cook type operator to run Tesla, and he probably needs one to run Twitter. Let him be the kind of the chief information or innovation officer.
Right.
That's really, he's just doing too much. And I think he finally realizes
Eric, we got to run, unfortunately. We got to get you back. Eric Clark, portfolio manager at Rational Dynamic Brands Fund. Stay tuned because our countdown to the close and Beyond the Bell starting up in just a minute.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here alongside Scarlett Fu. We're counting it down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Tim Stenovic, Katie Greifeld in for Carol Massar today. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And quick take here. Interesting day in the markets, Tim, where I think the market kind of looking for direction here. Not quite sure they're going to find it here on a week like this.
Yeah, the only thing that I'm seeing is tech really underperforming today, and we're going to get to that in just a few minutes. We did just have a really interesting conversation with Eric Clark, portfolio manager at Rational Dynamic Brands Fund. He joined us on our program, and he said that he wasn't ready to call a bottom, but he does think that the market has probably fully discounted the earnings recession that we've all expected, the earnings recession caused by raising rates. And at the same time, he caveated that with we could still see, 3,300 to 3,400 on the S&P 500, which would represent a significant decline from where we are right now, Katie.
He also said he's nibbling on Tesla, but that's another conversation. What I find remarkable when I look at today's action, 10-year Treasury yields just completely unchanged, less than 1 basis point higher, really captures at least my mood music. It's a holiday week.
You know, when I look at the industry groups, it's actually showing that you have more advancers than decliners. 7 groups in the green, whereas only 4 are in the red. But the one that caught my attention was energy stocks, down 1.5% on the day. This is, of course, on concern that perhaps China is not going to pivot away from COVID-0. You have some news out of there that there are some deaths from COVID. There's also a rise in infections.
Yeah.
Everyone thinks that nothing's going to change over the winter, but certainly as you get towards 2023, people are looking for some kind of growth.
A 4-day work week here in the United States because of the Thanksgiving holiday on Thursday, and we should point out Friday, markets will close early. So most of the price action, most of the volume you're going to get at the beginning of this week. You put it all together, you get a Dow Jones Industrial Average lower on the day by about 0.1%. The S&P 500 lower by 0.4%, and the NASDAQ Composite down by about 1%. Meanwhile, the Russell 2000 really couldn't get out of the way, down about 0.6%. And if you're looking for any bright spots, believe it or not, Dow Transports closed higher on the day in the green. That's largely on the back of a lot of those trucking companies rallying.
Well, really speaking to the larger companies dragging on the S&P today, we actually had more companies move higher in the S&P, 271 advanced versus 232.
But was it the right companies, Jim?
Well, it's the big market cap companies like Tesla, Amazon, and Apple that really weighed on the index, so bringing it down.
Scarlett.
Okay, and of course, I mentioned earlier you had 11 industry groups and energy was leading the way down. I want to take a deeper look into what's going on here. Katie, you mentioned Tesla. That is definitely a factor here driving the S&P 500 Auto and Components Index off by 5.4%. All 5 members in that index are down, led by Tesla. And of course, energy down there as well, off by 1.4%. Oil prices at one point tumbled as much as 6%. But of course, then Saudi Arabia came out and denied reports that it is moving forward with any kind of production increase at next month's OPEC Plus meeting. A lot of time between now and then, of course, so there could be a lot more headline risk to be aware of. And on the upside, food, beverage, and tobacco companies up by 1.5%. There is that safety play once again in force. And real estate up by 0.7%. Insurance and utilities also higher by about 0.5%, Katie.
I'm going to talk about the story that we all know for my first gainer. We're talking about Disney. One Bob out. There's another Bob in. Chapek replaced by Iger. Romain, I know you have thoughts here about whether that move makes sense, but Wall Street seems psyched. I mean, shares finished up over 6%. That gain was closer to 10% earlier, but still a big day for Disney. Let's also talk about Ross Stores, because had its biggest rally in 2 years on Friday. That's after reporting results. They were better than expected. They also boosted the full-year profit forecast. That rally is carrying through to today. Shares up 4.4% or so. I wanted to end on Domino's. I mean, like Scarlett walked us through, it's a good day for the defensive sort of sectors there. Domino's, the only piece of news I could find for today's action, they did invest in an EV fleet. They're going to roll out nationwide 800 Chevy Bolt EVs. I don't know if that's why the shares are up 2.7%, but that's a little bit fun.
I like that. I'll take it. All right, you got the gainers, Katie. I got the decliners. Let's talk about Apple. I mentioned these companies, big tech, mega cap tech, weighing on the S&P 500 today. Apple finishing down more than 2%. Scarlett, you alluded to the challenges that China is facing when it comes to potentially reopening and seeing more COVID cases, at least reported in recent days. That could be one of the reasons why we're seeing Apple underperform the NASDAQ 100 and S&P 500 today. Also at the bottom of the S&P 500 on a points and percentage basis, Tesla down 6.8% today. Shares down more than 26% from less than a month ago, October 28th, from when Elon's deal for Twitter closed. And then DraftKings finishing the day down by more than 5%. Biggest one-day drop since November 9th. The company moving lower after some customers reported that their accounts were compromised and money was withdrawn. The company did say that it had less than $300,000 of customer funds that were affected, and it intends to make whole any customer that was impacted.
Yeah, we should point out Tesla, fresh 52-week low. In fact, a new low going back to 2020. New lows for Coinbase as well. You turn and look at what happened in the yield space. We were talking about this a little bit earlier. Only modest moves to be sure here, up about 2 basis points on your 2-year yield, down about 2 or 3 basis points on the other parts of the curve. You put it together, though, you actually end up with deeper inversion here. Right now, your 2s, 10s, somewhere around negative 73, 74 here. Remember, last week, we were talking about a 2-10s curve that was at the deepest, the steepest that we've seen in the negative going back to 1982. As of today, it's the lowest that we've seen going back to 1981.
I suppose that moves towards what Goldman Sachs strategists were looking for, which is lower valuations reflecting recession, a peak in interest rates. I mean, if you have a more deeply inverted yield curve, does that mean more of a recession than it signaled on Friday?
I remember when the curve first inverted a couple months ago, everyone told me, hold your horses. It's the depth of the inversion that matters. It's the length of the inversion.
Did they really say hold your horses?
It's an expression.
Yeah. Okay.
Katie's partial to horses. So
I didn't even realize that I did that.
Yeah.
It was just so natural, very organic the way it came out. But now we're looking at a deeply inverted yield curve. It's been hanging around for a while. I feel like at this point, no one is really denying that signal anymore. Now it's just, I mean, where's the floor here? How deep could this go?
And I think, too, we talk about a lot of folks looking at sort of where that that longer end of the curve goes relative to where the Fed's funds rate is. And that'll, I think, give you a better sense here of how we shake out with regards to recession predictions here. Meanwhile, we are getting some earnings, guys. Zoom video crossing the wire right now. The 3Q numbers coming in on an adjusted basis. The EPS at $1.07. That appears to be a beat. The street was looking for 83 cents a share. And the revenue numbers coming in at about $1.1 billion, which is pretty much on the nose of what the street was looking for. Here's your forecast, Scarlett. 4Q revenue, 1.1 to 1.11 billion, slightly less than the street estimate of $1.112 billion. And then for the full year on EPS, 391 to 394 a share. That's kind of in the range of what the street was looking for as well.
And this is something we'll talk about with John Butler of Bloomberg Intelligence a little bit later on. But the big issue for Zoom here is whether small businesses are willing to pay up for subscriptions, the enterprise market, because we know that consumers have Zoom accounts, but as long as we get off at, 59 minutes, no one has to be...
59 minutes.
Yeah, no one has to pay the premium.
No one's paying the premium. And think about the growth story in the stock. You were talking about a stock, of course, during the pandemic was up. The revenue growth was something like a 100, 200%.
Astronomical, yeah.
Now we're down into the single-digit percentage range for this growth story. So not necessarily a growth story.
It's a utility.
Yeah, and that's really how the company has shifted the conversation as we've moved to this next phase of the pandemic, moving away from the idea that this is a tool that's meant for bringing people together who aren't coming into the office and more one of hybrid work. Here's what the company's CEO and founder, Eric Yuan, said in a statement, quote, "Our customers are increasingly looking to Zoom to help them enable flexible work environments and empower authentic connections and collaboration, and they're working to proactively address these needs with expanding platform continues for Zoom in this environment.
It's not like anyone stopped using Zoom. It's just that they haven't really monetized it in the way that people thought they should. Is that the story?
That's part of the story, and I also think, what happens if you start to see some of these startups that aren't necessarily, growing at the rate that they were growing at before we started the most recent regime of interest rate hikes, right? If we look at how much money has been raised for startups this year versus last year, we're not seeing the small companies and medium-sized businesses grow to the same extent that they were growing at over the last couple of years.
Who else needs a Zoom account that hasn't gotten one already? That's my question.
Gus?
What's the total addressable market here?
Yeah, what about horses? Is there a market there, Katie?
That's true. I don't know if they can perceive screens,
No?
and I mean,
I thought horses were smart.
they're actually incredibly smart and intuitive animals. That's true.
That's good. They just, how long do they learn how to sort of put the hoof on the mute button so they're
Listen,
up there?
the whole thumbs conversation, it's really challenging.
Yeah.
All right, we got to run, guys, before this gets too out of hand. That is going to do it for our cross-platform coverage of the market close right here on Bloomberg TV. As you said earlier, she's taking a well-deserved day off. A reminder from today that Quick Take is now simulcasting on Bloomberg Business Week. You can do that at bloomberg.com/QT. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio. Romaine lost me at the end a little bit. What were you guys talking about?
We were talking about horses and whether they could perceive screens. And even if they could, I mean, they have hooves, Tim. They don't have thumbs. How could they work it?
We work with horses in the real world.
Yeah.
We're not doing this over Zoom. We're not doing it in the
Again,
metaverse.
very intuitive, just sort of emotionally intelligent animals.
Okay, what are your thoughts on today versus the rest of the year and how we should read into a trade like today? Should we
I
not
don't
really
think
read
we
into
can
it?
put any stock in a day like today when you have volume falling off a cliff. I hear Thanksgiving is on Thursday.
You're right.
It's just,
Confirmed.
it's difficult.
It is, and then Friday is a shortened trading day, so
I'm not here.
very few people will be here.
You won't be here.
I will not be here. I'll be on vacation, taking a little break.
Were you going to say well-deserved?
No, I wasn't. It's not well-deserved. All right. In the meantime, let's get to world and national news. We got Nancy Lyons standing by in our 99.1 newsroom in Washington, D.C. Hey there, Nance.
Thanks, Tim. Well, transportation officials are letting air travelers know what they can bring on board planes this Thanksgiving. If you can spill it, spread it, pump, or pour it, then put that item in your checked bag. That includes canned fruits and vegetables. You can, however, bring baked goods and meat onto the plane in your carry-on. AAA says this Thanksgiving air travel is up nearly 8%. Well, President Biden is following tradition and today presided over the annual Feel Good White House event, pardoning 2 specially selected groomed and trained turkeys before the holiday.
The president joked that in an outdoor ceremony in 40-degree cold, he wouldn't gobble up too much time.
The votes are in. They've been counted and verified. There's no ballot stuffing. There's no foul play. They are big turkeys, aren't they? My fellow Americans, please welcome the 2022 National Thanksgiving Turkeys, Chocolate and Chip.
The 2 turkeys will live out their lives on the campus of North Carolina State University as the president and first lady head to Cherry Point, North Carolina for pre-Thanksgiving dinner with military families. In Washington, Irv Chapman, Bloomberg Radio.
1 person is dead, at least 16 hurt after an SUV smashed into an Apple store in Massachusetts. Doctors say the injuries include head trauma, even some mangled limbs. The incident happened this morning in the town of Hingham, just south of Boston. Comedian Jay Leno has been released from the Burn Center, where he's been treated for injuries suffered in a garage fire. At the World Cup, well, Team USA played Wales this afternoon. The game ended in a tie, 1-1. The U.S. faces England Friday. England today defeated Iran. The Netherlands beat Senegal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenovic, and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio here in New York. Katie, the billionaire owner of Nine West is eyeing NYC casino bid in a reshaped empire. We got Stefan Soloviev, who owns 9 West 57th Street, pitching a casino complex with a Ferris wheel and democracy museum here in Manhattan.
You know, the
Ferris
American
wheel?
Dream. No, but the American Dream Mall over in New Jersey has a Ferris wheel.
It does, and there was supposed to be years ago a Ferris wheel built at the tip of Staten Island, so you could
Oh.
actually see the views of Manhattan.
That makes a little
from
bit of
Staten
sense.
Island.
Would you go to Staten Island to ride the Ferris wheel?
Yeah, I've gone to Staten Island just to ride the ferry. So.
Really?
Oh yeah.
I've gone to Staten Island
When
few
you have
times.
a toddler,
Yeah.
you do stuff like that. Like you go ride on big boats and ships.
It does sound cold.
We did it in the summer.
Yeah.
It was
that makes
warmer.
more sense.
Yeah.
Tell me more about the story, Tim.
Okay, so Stefan Soloviev has been an apartment landlord, farmer, and a railroad operator with an empire stretching from the unforgiving croplands of the American West to the gladiatorial arenas of global finance. This, according to our own Patrick Clark. Now he wants to add gaming mogul to his Disney resume. He intends to apply for a license to operate a casino just south of the UN here in New York, so not too far from where we are, on a massive site that's been lying fallow since his father, the late Sheldon Solo, agreed to acquire it more than 20 years ago. The current plan includes a 1,000-room hotel, 4-acre, 1.6 hectare park, a Ferris wheel, and museum dedicated to the subject of democracy. It would be a good place for a Ferris wheel because you get great views of Queens.
Yeah, that makes sense. I wonder if this will fly. I mean, I think about New Jersey. New Jersey obviously can't have casinos outside of Atlantic City, which kind of leaves, if you're someone who lives in Manhattan, it's not like you can pop over to New Jersey for a casino.
Did you see the picture in this, the rendering of the Freedom Plaza project?
Yeah.
Check this out. It's on Bloomberg.com. Patrick Clark, who covers real estate for us, wrote this story. It's on the Bloomberg terminal and at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Dell Technology shares moving higher after hours. After earnings, Dell right now up by 6.7%. An earnings beat there. Zoom Video Communications also reporting earnings after the bell. Zoom shares, they are down now by 2.2%. Stocks ended the session lower with Fed hikes in focus. S&P down 15, drop there of 0.4%. The Dow down 45, down 0.1%. Nasdaq down 121, a drop there of 1.1%. 10-year yield 3.82%. Spot gold down $11 the ounce, down 0.7% to $17.38. West Texas Intermediate crude oil down 0.4%, $79.73 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, here at Bloomberg Business Week, we follow what's happening in the car industry when it comes to electrification very closely. It's not just one company anymore. Tesla, of course. There is pretty much every company from established automakers to upstarts that are going after what many see as the next market for really drivers. We got Daniel Weisland with us, Audi of America, from Audi of America. He joins us via Zoom from Herndon, Virginia. Daniel, it's good to have you with us. How are you?
Hey, Tim, it's great to have you.
Yeah, it's good to have you with us. Hey, tell us, before we get to details about what's going on specifically with your position at Audi of America, I just want you to talk a little bit about the environment that you see out there right now, because you're in these high-level meetings where you're talking about the American consumer and what the American consumer can spend money on right now and how to price these cars. What's the economy from your vantage?
Let me start first that we at Audi, we're fully committed to an electric future, and Audi is leading the way. And also over the last few years, we have learned how to manage COVID. We have learned how to manage supply challenges, and we also manage economical challenges. And as what we can see as for Audi right now, we see a high demand. Actually, our demand is higher than the supply, and especially for electric vehicles. So consumers want to buy more and more electric vehicles.
Well, that's what I want to dig into, this sort of shift to EVs. What I was going to ask is, with the inflation that we've seen throughout the economy, hottest inflation in a generation, do you think that has at all slowed this timeline down when you think about, the average American driver adopting EVs?
Well, actually, I think it's accelerating the way towards electrification. That's what we see at Audi over the last few months. With the introduction of the Q4 e-tron and the Audi Q4 e-tron Sportback, now we have the largest portfolio of any automaker here in the industry. And last month, we had a 70% increase with our battery electric vehicles. Last quarter, it was 50%. So again, we continue to see more and more consumers wanting to go into electrification. And that's something where we're well prepared. We're going to invest also going forward 19 billion euros over the next few years to make sure that there's a electric car for every consumer out there.
Hey, Daniel, what does the internal data tell you about your portion of vehicles that you sell will be EVs by the year 2030? Because according to Bloomberg NEF, only just over half of passenger cars sold in the U.S. will be EVs, and that's by the year 2030. And I don't know about you, but that seems kind of slow to me.
Yeah, I expect that it's going to happen much faster, especially in the premium segment. For Audi, I predict already in the next 5 years a tipping point that we will sell more battery electric vehicles than internal combustion vehicles. And by 2030, the vast majority will be battery electric vehicles.
Why do you say battery electric? Is that just semantics?
No, that's what the current technology provides you. This is the most advanced technology if it comes to zero emissions. There might be new technologies coming maybe after 2030, but for the time being, this is a technology which is the most developed, and that's what we see.
So let's talk about the supply chain here. It's something that we have been talking about for years on Bloomberg, specifically when it comes to chips and what that has meant for automakers. But from your vantage point, I mean, where are we in the supply chain story? Has peak supply chain already passed for your business?
I think going forward, we still see some challenges in the whole supply chain around the globe. But I think we also managed to adapt according to our customer needs and expectations. So, for example, now we're trying to pre-sell cars before they even arrive the country here, and that helped us obviously to fulfill the demand to a certain extent. And we manage this way also that certain challenges. If the car is not in the country, yeah, we can still sell it even if it's outside of the country.
What are you seeing as an entry point for people when it comes to EVs? You said the premium end of the segment, and Audi is certainly a premium brand. But what do you see as the entry point in terms of dollars? How low could you go in terms of price?
So we started in 2019 with our Audi e-tron, price point around $80,000. Then last year we brought in the Audi e-tron GT as electric car to the market. Yes, price point above 100,000. And now we with the Q4 e-tron and the Q4 e-tron Sportback, we brought down the entry price level below $50,000. And that's one thing, that it's the retail price, but you also need to look at the cost of owning the car. And with electric vehicles, it's a lot less than it is with internal combustion engine vehicles. The gas prices wherever you live have increased throughout the last few years. And with electric cars, obviously, it's a lot cheaper to maintain and run those cars.
That's a concern, though, to a lot of dealerships that make money by maintaining people's internal combustion engines and vehicles. What are the conversations that you guys are having with dealerships right now about how they need to be prepared for a future that's electric?
Our dealers are an essential part of our strategy and of our future. And we're discussing with our dealers constantly how we increase and improve our business. So actually it's welcome with the battery electric vehicles because, they're very loyal, those customers. They're not going to any different, garage to fix their car. And we should not forget, we have so many non-electric vehicles on the road, which they can maintain and make profit from. So we're not concerned about the future with Audi. Actually, we're excited about the future because our business is going to grow.
Well, let's talk about the future. We only have 30 seconds left. It's almost 2023. What are your priorities heading into the new year?
Our priorities is very clear. Our future is electric, as we say at Audi, and we have a clear responsibility towards a sustainable planet for our children and our generations to come.
Dan Weisland is president of Audi of America. He joins us via Zoom from Herndon, Virginia. Daniel, really appreciate you taking the time and joining us on Bloomberg Business Week this afternoon. Taking a look at how markets closed, the Dow ended up finishing the day lower by a little over 0.1%. The S&P 500 down 0.4%. The NASDAQ, the drag on markets today was certainly big tech. We saw that play out on both the S&P 500 and the NASDAQ. The NASDAQ finishing the day down by a little over 1%. You're listening to Bloomberg Business Week. Katie Greifeld in for Carol Master this afternoon. I'm Tim Stenevec, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Brokers studio. In just a few minutes, we're going to really round out our program today with a new book out. It's called Mao and Markets, The Communist Roots of Chinese Enterprise. We got one of the authors joining us this afternoon in just a few minutes. But first, let's get on over to Charlie Pellet because, Charlie, we've got some news in the after hours.
Indeed, lots of earnings. Let us begin with Dell Technologies. It reported quarterly sales that beat analyst estimates, signaling that demand for technology infrastructure does remain strong, even as computer sales have sharply declined. After hours, Dell up now by about 5.6%. Also reporting after the bell, Zoom Video. It reported adjusted EPS for the third quarter that beat the average analyst estimate, but after hours, we have got Zoom trading lower by roughly 4%. And one more company that reported moments ago, Agilent, it is up now by 4.5%. Stocks fell today as investors continued to parse comments from Fed officials who broadly reiterated their resolve to remain persistent in their fight against inflation. The S&P today fell by 15 points, a drop there of 0.4%. The Dow down 45, a decline of 0.1%. Nasdaq down 121, a drop there of 1.1%. 10-year yield 3.83%. The 2-year 4.55%. Spot gold down 0.7%, 17.39 the ounce, while West Texas Intermediate crude was down 0.4%, 79.73 a barrel. Well, as for the market outlook, Eric Clark is portfolio manager at Rational Dynamic Brands Fund, and he was our guest right here on Bloomberg Business Week.
I think that 3,300, 3,400 on the S&P is a reasonable place to go. It doesn't mean we have to go there. It doesn't mean we stay there. But I think if we get to that level, you're going to see some, multi-year wonderful buying opportunities. And sentiment is probably going to be dreadful if we get down there, but that's usually when the best buying opportunities happen, when it feels bad.
And right now we've got the S&P at 39.49, down today by 0.4%. 10-year yield 3.83%. Spot gold down 0.7, 17.39 the ounce. West Texas Intermediate crude down 0.4, 79.73 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, when we've been talking about China over the program this afternoon, a lot of it has been focused on China reopening and the slow process that it's had and what COVID-0 has done to the country's economy. And in fact, we've spent the last couple of years really focused on that. Our next guest, though, argues we have to go back even further to really understand business in China today. We've got Christopher Marquis with us today. He's the author of Mao and Markets, The Communist Roots of Chinese Enterprise. He wrote the book along with Kunyuan Chao. He joined us via Zoom from the Pittsburgh area. Christopher, Professor, it's good to have you with us. How are you?
Great, thanks. Great to be with you.
Well, take us into what we're missing in the discussion that we have about China and the economy today. Why do we have to go back to Mao to understand what we're seeing when it comes to the incredible growth that we've seen in China over the last 4 decades?
Yeah, so I think you're spot on. Amazing, incredible growth. Really, the last 40 years in China has been, maybe an unprecedented economic miracle without a doubt. But people are really sort of surprised at how hardline Xi Jinping is. You just mentioned the COVID situation, just how absolutely, locked down and inflexible, the system has been. And I think, that is a hint as to why it's important to go back in history, because Xi Jinping is really not a surprise if you look at the foundational sort of ideas and principles that were put in place by Mao. And what we argue in the book is that these last 40 years, the West has focused on some of the opening policies, and this has been very much in line with how we think the world should be. As China opens, its doors economically, that then, of course, they would become more democratic, more liberal. But actually, as we've seen, that's not the case. And so to really understand the foundational sort of hardline communist principles that Xi is currently implementing, you have to go back and look and see what Mao did.
I want to talk more about the similarities or sort of the parallels that you see between Mao and Xi Jinping, because he's sort of, I mean, in this most latest reshuffling, feels like he's pretty close to total control in China. Of course, he stacked his leadership ranks with loyalists. Tell us a little bit more about what you see there.
Sure. And of course, comparing leaders across eras, I mean, you have to take it a little bit with a grain of salt, but they're obviously, different people, different eras. So, but I do think, if you look at the core, ideology and principles of Mao, you can actually learn a little bit about how Xi Jinping thinks. So some of the key areas and items are, this idea of the party at the center and the party controlling everything. We talk about China, like it's a nation state like the U.S. or a European country, but actually the government is not in charge of China. Actually, the Communist Party of China sits on top of the government. And so, this I think was really underplayed a bit over the past 40 years, and it's come back to the fore. So, Xi has a number of sort of sayings that he, repeats that Mao had said, and one of them is something like east, west, north, south, center. The CCP leads everything. So I think, that is one thing that we really have to come to grips with, that actually it is an authoritarian, regime that does not sort of have the rule of law and can, abduct foreigners from other countries and various other things that are really against sort of the liberal principles that we base governance and interaction in the West. Another thing that's in some ways, corollary to that is the importance of nationalism and sort of, make China great again, so to speak. I think this is something, Mao talked about, China standing up, sort of becoming a great nation in the world. I think that discussion also, subsided a bit as China was trying to grow economically, and Xi definitely has that back at the fore.
Hey, Christopher, stick with us, Professor Marquis. He's professor of Chinese management at the University of Cambridge, also the author of the new book, Mao and Markets, The Communist Roots of Chinese Enterprise. We're going to do some news, and then we're going to come back and continue our conversation. Katie, when we do come back, one thing that I want to talk about is the role of American companies and multinational companies in China, and to what extent they need to understand the historical roots of Chinese enterprise today in order to successfully operate there. Because as the professor was just explaining, there are many values that don't necessarily align with a lot of the values of many companies from the liberal democracies. Yet those companies want access to those customers.
Absolutely. And vice versa, when you think about Chinese companies trying to do business abroad, and China may be cracking down there.
All right, we're going to get to that in just a few minutes. In the meantime, world and national news, we go to Nancy Lyons in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. Consumers could see higher gas prices and shortages of some of their favorite groceries during the winter holiday season. That's if railroads and all of their unions cannot agree on new contracts by an early December deadline that has already been pushed back. The largest of the 12 rail unions, which represents mostly conductors, rejected management's latest offer that included 24% pay raises. Brad Edelman is a labor attorney with the Brotherhood of Maintenance of Way employees. He says it all comes down to health benefits.
They have been so phenomenally profitable over recent years, it's hard to even calculate. And this is a drop in the bucket on that. And it's way past time for them to do that after their workers work straight through the pandemic.
Edelman says the railroads would see improved service if they treated their workers properly. Well, 5 days after launching from the Kennedy Space Center, NASA's Orion spacecraft reached the moon today. NASA's Sandra Jones says the spacecraft set a record as it traveled behind the moon.
It's about 40,000 miles past the moon in its orbit. This is actually 30,000 miles farther than the previous record set during Apollo 13 and will be the farthest in space any spacecraft built for humans will have ever flown.
Orion will stay in that orbit for about 6 days before firing its engine and coming back home. At the World Cup, Team USA's first match, which was against Wales, ended in a draw. The next game for Team USA will be against England this Friday. Today, England defeated Iran, while the Netherlands beat Senegal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Really appreciate it. Katie, one of my decliners today was DraftKings. The company ended up moving lower in trading today. Fell by, what, close to 5%? More than 5%. Yeah, 5% exactly. After some customers reported that their accounts were compromised and money was withdrawn.
Yeah, so the company believes that customers' login information was compromised on other websites, then used to access their DraftKings accounts. That's according to the company's co-founder, who also said that DraftKings has seen no evidence that its systems were breached to obtain the information. And that this is a quote, "We have identified less than 300,000 of customer funds that were affected, and we intend to make whole any customer that was impacted."
I want to go back to the statement that the company said it believes customers' login information was compromised on other websites and then used to access their DraftKings accounts. So what this means is that customers were using the same passwords and login information.
Can you imagine?
Well, I can't imagine, because that's sort of the basics of why password managers are what security, people who follow this stuff closely, that's what they recommend when I ask them, hey, what recommendations do you have for us to keep safe online? Like, the first thing that they always say to me is use a password manager, because then you can use a randomly generated password that is unique to that website.
You know, and I never do that.
Oh, I was hoping you wouldn't say that.
Do you do that?
Yeah, I do. Yeah, I do.
Wow.
Because I've been covering this stuff for years, and I've been using password managers for years. And that's what security consultants say.
I always use the same base word and then a different number.
You shouldn't talk about this on air, because then people are going to know how to hack you.
Just rooting for chaos here, but
well, yeah, that's the concern.
Yeah. In any case, this comes at a not great time for DraftKings. Earlier this month, it reported that user growth had slowed in the third quarter. That caused its shares to plunge by the most in trading history, so more bad news.
Okay, use unique passwords, folks, and also two-factor authentication as well, so you get a text when you enter that login info. It's Bloomberg Business Week on Bloomberg Radio.
analysis, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story and a headline from the Bloomberg Professional Service. Sources tell Bloomberg digital asset brokerage Genesis is struggling to raise fresh cash for its lending unit, and it is warning potential investors that it may need to file for bankruptcy if its efforts fail. Earnings after the bell include Dell Technologies. It reported quarterly results that beat estimates. Shares after hours up by just about 5%. Also reporting after the bell, Zoom Video Communications. It reported adjusted EPS for the third quarter that beat the average analyst estimate, but after hours, Zoom is down by roughly 4%. A down day for the Dow, the S&P, and NASDAQ. Fed speak certainly weighing on investor sentiment. S&P down 15, drop there of 0.4%. The Dow today down 45, a drop of 0.1%. NASDAQ today down 121 points, down by 1.1%. 10-year yield 3.83%. The 2-year yielding 4.55%. Spot gold down 0.7%, $17.38 the ounce, while West Texas Intermediate crude down 0.4%, $79.73 a barrel. Bitcoin now down 4%, 15,591 on Bitcoin. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. I do want to get back to our guest, Christopher Marquis, professor of Chinese management at the University of Cambridge, also the author of the new book, Mao and Markets, The Communist Roots of Chinese Enterprise. Chris is back with us once again via Zoom from the Pittsburgh area. So, Professor Marquis, I wanted to get right to the question that I started to ask at the end, and then we ran out of time. It's the idea that you mentioned all the things about the environment in China today, explaining the concerns about human rights abuses and how a lot of what we see, or some of what we see come from there, don't necessarily run in tandem with the values that a lot of liberal democracies would espouse. How do you explain American companies and multinational companies' desire then to do business in China, and to do business in China according to the way that the Communist Party of China wants business done?
Yeah, that's a really great question, a really challenging issue for companies, not just from the U.S., but really around the world. First of all, I want to say, of course, they're interested in the market. I mean, China has a population of 1.4 billion people, GDP that I think, not on a per capita basis, but on an aggregate basis, the largest in the world. So there's a lot of economic opportunities in China, which, businesses that are globalizing may want to take advantage of. But, I think businesses have to have clear lines, so to speak, as to what they will do and what they won't do as far as their values and ethics, and how that conforms to, the beliefs of the societies that they are part of. So, clearly human rights is an issue. You have to know that you'll be dealing with the government in a very deep and potentially invasive way, and you have to be ready for that. The NBA, which was banned for a while in China, I talked to some of the leaders there before after they were banned, which was because one of the owners, one of the general managers, tweeted about a support of Hong Kong protests. So you're
talking about Daryl Morey a few years ago.
Of course, exactly. And they said, the big error we made is we did not really know anyone in the government to help, both understand the government's point of view and try to influence things, to sort of get back on the air. So, you really have to, actually engage with and understand the CCP and the government.
So with that said, Professor, I mean, what would you advise companies? Would you say that, I mean, given what you know and what your research and reporting tells you for writing this book, would you say that it's not worth it for businesses to do business there?
I think it depends on the sort of the industry, to be honest. But I would not say it's not worth it in any sort of blanket way. The reason being is that, engagement between the U.S. and China is absolutely essential for, I don't want, it might sound like a hyperbole, but sort of for the future of humanity in some ways. I think if the more and more tension and isolation, there'd be less cooperation on important things like climate change, potentially could escalate to some sort of war situation over maybe Taiwan or something. And this, may sound extreme, but I guess my point is that I really think that it's important for us to find ways to effectively engage because, with person-to-person diplomacy, so to speak, interaction is how we are able to actually build bridges in the world. And if we don't engage, we will fail to understand China and the Chinese system and make it harder in the future for us to, compete with them and even cooperate. So, so I do think it's important, in spite of the difficulties and difference in values, to continue talking and to continue engaging.
Do you think that there's any companies or even sectors broadly that have done a particularly good job of that type of engagement?
Yeah, so I do think that some on the entertainment side. So I think in the NBA, I mean, they did have that sort of issue, but they've done a lot of great work with different localities in China. Work with the Chinese Basketball Association, helping get that started and up and running. Yao Ming, who is the head of that, former Rockets star himself, has played a big role in that. Excellent relations with local governments. So, and I think that other sort of culture industries, although that's actually been a challenge because there's been more and more censorship. So I would say culture is one that has done reasonably well.
What do you see in terms of, I don't know, the future of companies there? And I ask this in such a blanket way to ask it, but truly you see a company like Apple, and it's my go-to because Apple's not just an important company in terms of selling products to Chinese consumers, but also manufacturing products there. The company has said it's moving to a certain extent, trying to untie itself a little bit. What do you see?
Yeah, no, definitely. And I think it's a huge challenge for Apple to do that. I mean, you look at, they talk about moving to sort of Vietnam or India. I mean, Vietnam has a population, I think, of 95,000. The Chinese, the laboring force, migrant labor that comes from the rural parts of China to the work in the factories that are mostly in the East, is hundreds of millions of people, like 200 or 300 million people. So the labor flexibility and skill that exists in China has been built up over decades, and I think it's going to be hard for Apple to move. And I think that in many companies as well. And this, I mean, I think is the real, sort of leverage that actually China has over companies like Apple. Some it's about the market, but others it's about actually not being able to replicate the supply chain.
Hey, Professor. We got to leave it there, but thank you so much for joining us. Really appreciate you taking the time this afternoon. That's Professor Christopher Marquis, Professor of Chinese Management at the University of Cambridge, the author of the new book, Mao and Markets, The Communist Roots of Chinese Enterprise. He wrote the book along with Kunyuan Chao, joining us this afternoon via Zoom from Pittsburgh. Katie, before we go, I want to get to a headline that Charlie hit, the crypto firm Genesis warning of a possible bankruptcy without funding. You've been covering this story very closely. Bring us the updates.
So Genesis here warning of a possible bankruptcy without funding. This is according to people familiar with the matter that they've spent the past several days seeking at least $1 billion in fresh capital. That didn't include talks over a potential investment from Binance. That's a familiar name. And remember, Genesis did halt withdrawals last week. This is a crypto lender, and we know that space has been under a lot of pressure for months now.
But all stemming from this most recent round, stemming from FTX's collapse.
Exactly.
All right, much more to come. And also be sure to tune in a little bit later because Joe Matthew is going to be covering the latest when it comes to politics with Sound On. You're listening to Bloomberg Business Week. Tim Stenevec and Katie Greifeld. We are live in the Bloomberg Interactive Brokers studio, and that is going to do it for our program this afternoon. Have a great weekend, and have a great day, everyone.